Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Hey, this is Stan the Annuity Man, and welcome to Fun with Annuities. If you are a client listening, I appreciate you tuning in. And if you're not, please feel free to contact us at theannuityman.com, and we will put together a customized plan for you and listen to what you're trying to achieve. And we will tell you if you don't need an annuity. In a lot of cases, that is the case. It just depends on what you're trying to solve for. So if you're not familiar with my site, theannuityman.com, I would encourage you to go there. We also have a sister site called annuities.direct. And just to explain a little bit about that is my vision for the annuity industry and how this should be done correctly is to give you the choice on how you want to shop for annuities. So theannuityman.com is full service. It's if you want an annuity advisor. There is a handful of us, and they're all filtered by me, and me included. I'm involved. So you might get me when you choose to speak with somebody. We understand what we're doing. We're going to listen to you. We're going to quote all carriers. We're going to put together a customized plan. That's theannuityman.com. The other site, annuities.direct, and you can get there from theannuityman.com. Annuities.direct is for the people out there that want to run their own quotes and do their own research and do their own thing, and only engage with us if they're at the finish line and they want to make sure they're doing the right thing, etc. So there's two choices, all run by me, all owned by me, all with my direction and fingerprints all over them, and nothing in either company happens without me knowing about it. Theannuityman.com and annuities.direct. So hopefully you'll go to theannuityman.com and check them both out. And, I think you'll like what you see. So today's topic is the safety and suitability of annuities, which is dovetailing into the ad campaigns that everyone sees. I hate all annuities, or all annuities are expensive, which is just garbage. I keep covering that in a lot of my podcasts because it's making the top of my head explode. Saying you hate all annuities is like saying you hate all restaurants. It makes no sense. There's many types of annuities, and everybody in America owns an annuity. Every single person, every working American, every person with a Social Security number owns an annuity. It's called Social Security. So you can't hate all annuities and then love your Social Security payment. So I just laugh. I think the industry should do a reverse ad back into thanking everybody for being an annuity owner, and maybe you want another one. I mean, that's what I would do if I was the agent czar for the annuity industry. That should actually be a smart thing for the industry to do, but they don't like what I do out here because I tell the brutal truth, and they're all trying to say, I have the best product or my product's the best. It's not true. I mean, they all have good products, all carriers. I represent them all, but they're commodity products. You need to shop all carriers for the highest contractual guarantee for your specific situation. So I don't blame the carriers for a lot of the stuff that's going on. They're trying to do the best they can, but it's hard to regulate and oversee what an army of agents are saying every day to get the sale. I mean, it's impossible. You can't blame the carriers. I do think there should be more oversight. And groups like the AARP are doing a great job sneaking in their little spies to the bad chicken dinner seminars and things like that. I really applaud them for doing that. Good for you. We need all the help we can get to clean it up, because annuities have a very unique benefit proposition that no other product category has. And that benefit proposition monopoly is that annuities will pay a lifetime income stream regardless of how long you live. No other product does that, period. So, if you're looking for lifetime income stream, annuities have to be where you head, because that's the only product that does that, in combination with your pension, in combination with Social Security. I say pension for people that are fortunate enough to have one. But today, talking about the safety and suitability of annuities, I always tell people there's really only 5 places on the planet that's for safe money. And even the tinfoil hat conspiracy theorists can probably blow most of this up. But this is as safe as it gets, okay? Let's go through the 5. Number 1, money markets. Number 2, CDs. Number 3, United States Treasuries. Number 4, AAA municipal bonds. And when I say AAA, that means insured municipal bonds. And then fixed annuities. Now, of those 5, I would say fixed annuities ranks 5th. Treasuries, I would say, would be number 1. CDs and money market 2 and 3, munis 4, and then fixed rate annuities 5. And fixed annuities, when you say fixed annuities, it's single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, multi-year guarantee annuities, and fixed index annuities are actually a fixed annuity issued by a life insurance company. It's not a security. So the safety and suitability of annuities really comes down to, when you're looking at an annuity, what makes it safe? Well, the first thing you have to look at is the claims paying ability of the carrier. What's their rating? What's their COMDEX score? And if for people out there that don't know what a COMDEX score is, on my site at theannuityman.com, we provide the COMDEX rankings for every single annuity company out there. And COMDEX is a compilation score of 1 to 100, 100 being perfect. And they're looking at all 4 major rating services that look at annuities: AM Best, Moody's, Fitch, and Standard & Poor's. Those are the 4 primary ratings agencies that look at annuities and annuity companies and their financials. What COMDEX has done, which I love, is make it easy to understand. We all understand 1 to 100. We all understand 100 is perfect. So what they've done is they have looked at all 4 rating services and then created a formula to create a score from 1 to 100, 100 being perfect. Now, it's not a perfect system. COMDEX is not perfect. In other words, if you as a carrier don't subscribe to all 4 rating services rating you, then there's a little bit of a ding there. But I think it's a good way to look at all rating services. You can look at, you pull that PDF, and we update it monthly off the site. Go to theannuityman.com under resources. You can see the rating services that follow that specific carrier, whether it's 1 or 2 or 3 or all 4, and then the COMDEX score as well. And if you want to dig further, if you say, hey, Stan the Annuity Man, I'd like to see the financials, or I'd like to see more, or I can get you what you need. I have subscription services to organizations that can provide as much detailed financial background as you need to see to make an informed decision that makes you feel comfortable with that decision. Because in essence, you're transferring the risk to the carrier. So you have to understand that. The other thing that backs up this from a safety standpoint from a fixed annuity world, and fixed annuities are regulated at the state level. So each state has what's called a state guarantee fund that backs annuities specifically up to a certain level. When I say specifically, certain types of annuities, like annuitization type products like immediate annuities, are covered differently than deferred products like indexed annuities or multi-year guarantee annuities, CD type annuities. So that resource is www.nolhga.com. I'll go slow. Nancy, Oscar, Larry, Harry, Gary, Apple.com. NOLHGA.com. And when you go there, you can pull up your state guarantee fund under the frequently asked questions and see how much is covered. And it's per owner, per policy, per company. And the details will be there. But I don't think you rely on that. In essence, the insurance industry does not want you to. They actually prohibit agents from mentioning the state guarantee fund as part of the sales pitch, for lack of a better phrase. You can't say, hey, I need you to buy this. I'd like for you to buy this company that's B+ rated because it's covered by the state guarantee fund. That's not allowed. So I think your primary rule of thumb is to look at the claims paying ability of the carrier. There are governing bodies that oversee annuities. There's National Association of Fixed Annuities, and there's a lot of good organizations out there that are doing their best to make sure that the consumer is protected throughout the process from start to finish. And remember that annuities are the only product on the planet also that has what's called a free look period, meaning that you can get your money back. You don't have to give them a reason. You just get your money back. And each state has a specific free look time period. It ranges from 10 to 30 days, depending on your state. But in essence, you can test drive the policy while it's in force and get your money back. within that time frame. I think that's fantastic. Who does that? If I'm annuity czar for the day, I'm pounding two things. Number one, lifetime income is a monopoly we have. And number two, we have the only product you can test drive. That's all I would say over and over and over. I think those are so pro-customer, you can't see straight. I mean, that's the most pro-customer dual benefit package of all time. Lifetime income that you can never outlive. No other product does that. And no other product allows you to test drive it. Own it, test drive it, have the policy in hand, and regardless of reason, you don't have to give a reason, you can get your money back if you tell the carrier within that specific time frame or the free look time period. So that's looking at it from the safety standpoint. Variable annuities, of which I don't sell, just disclaimer, I don't do anything variable. I do everything that's guaranteed. I mean, I don't like variable annuities. I think they have their space. 1955, they were put on the planet for tax-deferred growth. And in some cases, it does fit. I look at the contractual guarantees only, so that's not my lane. But those, because those are securities, they're regulated by FINRA, the SEC. It's a whole different ballgame, but there's some safety there too. If you're buying it from a brokerage firm, it's SIPC type coverage. It's good coverage, so there's some safety there as well. But again, all annuities, regardless of type, are issued by life insurance companies. The other thing from a suitability, let's talk about suitability. So safety is kind of covered, and you can do your own research there. But suitability is where the rubber meets the road. And I applaud the annuity industry because they're really working hard on trying to get this right. And everything from the application process to the questions being asked to when you do an annuity to annuity 1035 transfer or direct transfer, annuity to annuity, they have a side-by-side comparison mathematically to make sure that the annuity you're transferring to is better mathematically for you, not the agent, for you than the annuity that you're coming from. So in other words, they want to make sure if you're transferring from X annuity to Y, they want to make sure that the Y annuity, the one you're going to, is mathematically better than the one you're leaving. And in a lot of cases, it's not. A lot of cases that we have, that people say, I'd like to transfer this annuity. And we'll say, well, email us your statement, PDF your statement to us. And we will do a side-by-side comparison. And if you're leaving too many benefits on the table and you can maximize that older policy, we'll tell you how to do that. So that's part of the application process. So if you want to see the application or a specimen policy before you buy, we can provide that. And any agent worth their salt, worth anything, will provide a copy of the application and a copy of the specimen policy. Now, a specimen policy doesn't have your specific numbers in there, but it does have the verbiage that will be in your policy. So if you want to see that, you can do that as well. Also, from a suitability standpoint, in most cases, the annuity industry does not like to see you as a consumer put more than 50% of your investable assets, not home, investable assets into an annuity of any type. So I got off the phone this morning with the guy, and he said, I put all my IRA, 100% of my IRA, in indexed annuity. And I just went, what? Huh? How? Unless because he told me his entire picture, and that IRA represented way more than 50% of his investable assets. And I went, that's impossible unless the agent fudged on the application. And that sometimes happens. I've seen that. I'm not accusing. I'm seeing it. There's bad apples in every industry, okay? But he should have never been allowed to put 100% of his IRA into that annuity based upon the investable assets that he told me. So the industry is really cognizant of that. But once again, you can't blame the carriers, because when the application comes in, the annuity carrier, all they're doing is looking at the application and how it's filled in. It's the agent's rear end that's on the line on how they filled it in. Okay? It's not the carrier. The carriers are doing a great job of filtering out a lot of the fraud or the aggressive pushing of products. But there's still you got to be real careful out there. So that from a suitability standpoint, I would go as slow as humanly possible. I'd ask for all the information. I'd ask for information on the carrier if you want it, the application if you want to see that. I'd ask for a copy of the application from the agent if you want to make sure that they filled it out correctly from what you told them. And the other thing, and I think this is the only true protection that you have with a lot of these annuity presentations, is when someone pitches you a product that sounds too good to be true, and a lot of this happens in the indexed or variable world, primarily indexed. I mean, I don't hear a lot of variable stuff, but anytime there's potential growth on a product, sometimes numbers are juiced and pushed, and dreams are unicorns are chasing the butterflies, and you need to make sure that what you're buying is real. Write down exactly what that agent told you, exactly how you understand it. Every single point is as detailed as you humanly can write it down, and then sign and date it at the bottom and have the agent sign and date that as well. What will happen is if the agent has told the truth, they'll sign and date it easily. If they're a sociopath, they'll sign and date it too. But if it's truthful, they'll sign it. But if they've pushed the limit a little bit and they notice that they pushed the limit a little bit, then they'll reel back. They'll reel back some of that sales pitch, which is good. You need to start saying, wait a minute, why would you pitch it? And if it's not all the way true, but that's truly the only consumer protection that you have, is really to create a statement of understanding based upon how you understand it. In other words, create your own statement of understanding. You sign and date it, have them sign and date it. And if they sign and date it, that agent owns that sales pitch, if you know what I mean. And so during the free look time period, if you buy it, you call the carrier up and say, okay, this is what the agent signed. Does it do this? Yes or no? And those people at the carrier will tell you the truth, and then you can make your decision from there. Now, the 50% rule did not come from, it's amazing the story behind that. About 10 years ago, people started suing annuity companies because they were putting too much money into annuities. Now, the funny part about that is it's typical consumers. The consumers were making their decision. There was no rule in place at that point in time, but the consumers were making their decision to put all of their money into annuities. And then after the fact, figured out, I guess, with lawyers nudging and help, that they put too much money, and then they sued the annuity carriers. Well, the annuity carriers are smart. They're like, wait a minute, we're not going to allow that to happen. And that's how that 50% suitability rule kind of got put in place. And then from there, they've kept aggressively thinking about how do we protect the consumer. And so each year I'm applauding kind of what they're doing to try to reel it in and keep the consumers protected, because there's 10,000 baby boomers retiring every single day. And most of them are looking for contractual guarantees, of which annuities are contracts. They're contractual guaranteed transfer risk products. So the fit is perfect, but also because of that demographic tidal wave, there is a possibility for aggressive sales techniques. And the industry is really wanting to clamp that down. They just want the truth told. These are great products when you know the benefits and the limitations, and all products have benefits and limitations. So remember a couple things. When you buy an annuity, ask two questions. What do you want the money to contractually do? And when do you want those contractual guarantees to start? And then remember the acronym PILL to see if you even need an annuity. P is for principal protection, I is for income for life, L is for legacy, and the other L is for long-term care. If you don't need to contractually offer one or more of those solutions in the pill, then you do not need an annuity. Do not buy annuities for market growth. Buy them for the contractual guarantees. You can always do better market growth-wise with non-annuity products. I know that agents out there in the industry hate me saying that. That's my opinion, but I think I'm right based upon where I've been in my life. I used to work for Dean Witter and Morgan Stanley, paying over UBS. So I understand markets and real growth, and I understand how things work. So I think annuities are transfer risk products, and that's where they fit in the portfolio. They're commodity products. You own them for what they will do, not what they might do. So just remember that as you're shopping. But that's safety and suitability of annuities. Bottom line, whatever makes you feel comfortable to make the decision on your terms and your time frame, whatever information you need, ask that agent for it. Hopefully it's me, hopefully I'm your agent at theannuityman.com. We'll provide whatever you need. We'll dig in. I mean, if you need financials, we'll give you the financials. If you need the application, we'll send you the application. If you need the specimen policy, we'll send you that. We need you to have a full picture of what you're going to own, because you're going to own a contract. So don't buy the sales pitch, because you're going to own the contractual reality. Don't buy the dream. So with that being said, a couple things before we go. I do have a YouTube channel, Stan the Annuity Man YouTube channel. I'm releasing a video every single day. It's about 8 to 10 minutes per video. Very informative, kind of like this, non-salesy. And I do write an article every day for some major platform. Right now I'm writing for thestreet.com. But I've written for Market Watch and all kinds of other places as well. I am a writer. I've written 7 books, and you're welcome to get those for free at my site, theannuityman.com. I'll ship them to you if you provide your shipping address. No obligation and no cost. So with that being said, my name is Stan the Annuity Man. I am America's annuity agent, and I look forward to hopefully speaking with you soon, and thanks for joining me on Fun with Annuities. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 Annuity Owner's Manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.